The only thing better than booking 2 and 3x returns on your money with penny stocks is getting paid while you wait. The problem is that most penny stocks just don't pay dividends. In this video, I'll show you how to find the best penny stocks for that cash flow and reveal 5 dividend stocks to watch for those huge returns. We're talking penny stocks that pay dividends today on Let's Talk Money.
Beat debt.
Make money.
Make your money work for
Creating
you.
the financial future you deserve.
Let's talk money.
Hey Bowtie Nation, Joseph Hogue with the Let's Talk Money channel. A special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of the community yet, just click that little red subscribe button. It's free and you'll never miss an episode. Nation, you know we love penny stocks here on the channel. From the 320% return on shares of Fastly since November to nearly 160% return on Eldorado Gold over the last year. No other investing strategy produces those triple-digit returns. But we also love us some dividend stocks, right? I mean, who doesn't want to get paid to invest while they wait for that stock price to rocket higher? And that's the dilemma, though, that most penny stocks just don't pay dividends. These are small companies plowing everything they earn back into growth. New, fast-moving companies that are singularly focused on growing the share price. So when Mike here asked me if I could do a video on penny stocks that also pay dividends, I had to take up the challenge. In this video, I'll show you how to find those penny stocks with a dividend yield, how to screen for those solid companies with strong upside potential, and then how to narrow down your list. I'll then reveal 5 top penny stocks to watch that will pay you to invest. Now to find those penny stocks, I'm going to be using StockCard.io, a new research platform that I've been testing out. I really like how StockCard simplifies professional level stock analysis, basically taking the guesswork out of fundamental analysis. You can research stocks by investing in themes like COVID-19 vaccines and electric vehicles, or create your own screener to find the best investments. I'll walk you through some of my favorite features during the video. StockCard has a great starter plan that's totally free to use. I'm actually planning on putting some of our stock portfolios on the site, like our Dividend Challenge portfolio. So look for the link in the video description below and sign up so you get notified when we make changes to these portfolios. I want to get started looking at that list of penny stocks, and I'll show you how we picked these later, but I also want to get your opinion on this. Do you want your penny stocks to pay dividends? I know some investors just want that growth and want management to be plowing everything back into the company, so maybe they can overlook those dividends, but then it's really nice to get that quarterly cash flow from a stock also. So what do you think? Does it matter to you if a penny stock pays a dividend? Do you want growth or dividends, or maybe even both? So just scroll down and let us know in the comments below. Our first penny stock is Ellington Financial, ticker EFC, a $550 million mortgage REIT paying an 8.8% dividend yield. Now, Ellington is really interesting here because it's not just a mortgage REIT investing in those residential mortgages and then passing that cash flow on to investors. The company actually has an extremely diversified loan portfolio with about 1/3 in residential mortgages, 28% in those commercial property mortgages, but also corporate bonds and 17% of the assets in consumer loans. That means its outlook and your dividends aren't just tied to one sector like residential mortgages, but diversified across all these loan types. And if we look into the StockCard.io platform, each of these cards is going to represent a group of fundamental factors for analysis, and we can click on each of these to drop us down into the detail. Scroll down a little and we see earnings and dividend calendar information, so you never miss the next earnings report or dividend date. But let's look at some of these fundamentals because it's really going to help you find these penny stocks yourself. If we go to operations, then we see it's made up of these 3 sections: sales growth, profitability, and cash availability. You can click on each of these to see the factors that go into scoring each company. For example, Ellington has strong sales growth of 9% in the last fiscal year and 136% in the last quarter. It also got a solid current ratio and quick ratio, 2 very important cash measures for how well a company can cover its liabilities and cash needs. Besides that 8.8% dividend yield, I really like that diversified business model here. You just don't get that with a lot of these other mortgage REITs, which specialize in just one segment of the loan market, either residential mortgages or commercial back. Shares of Ellington Financial are priced at just 0.84 times book value, which means you're getting about a 19% discount to the portfolio assets beyond that dividend yield. Now the stock is actually down 34% from its 52-week high, and I like it up to at least $15 a share, which would put it about a 20% return plus the 8% dividend. We've got 4 more penny stocks to look at, but I want to give you an idea of how I found these, what I'm looking for in these penny stocks. In the stock card platform, you can click on Discover in the menu, and then in your filters here on the right. We'll create a new screen here, call it Dividend Penny Stocks, and then scroll down to the filter options. What we're looking for is low-priced stocks, companies with a market cap of less than $2 billion, but ideally in that less than $1 billion range for the most flexible penny stocks. Since we're looking for dividend stocks here, I'll toggle these two to filter for stocks with a strong and neutral dividend-paying status. And you can always check your results to see how many stocks fit this criteria. So here I already have 574 companies in that penny stock list. So I want to click edit and narrow it down further. So I also want to screen for companies with a positive sales track record and good cash availability. And we can click through and see we've narrowed it down to about 20 penny stocks to watch, which we can dig deeper into to find our top 5 picks. So that initial screen includes a market cap filter because we're looking for those smaller companies that can grow into big opportunities. We want companies with a commitment to shareholder return through their dividend. And then we've got those 2 fundamental analysis filters here, that positive sales growth and good cash availability. And within StockCard, each of these fundamentals is represented by multiple ratios and analysis. For example, within that cash availability, it was a measure of the current ratio, the quick ratio, debt to equity, and then free cash flow that all went together for one rating on the stock. It's just a super simple way to analyze a stock, especially if you don't have the time or don't want to find each of these measures yourself by digging into the company's financial statements, the income statement, the balance sheet, and the cash flow. I want to get back to our penny stock list though with $718 million Magic Software, ticker MGIC, and its 2.5% dividend yield. Now MGIC might not offer the highest dividend yield in some of our picks, but I really like the growth potential in this name. The company is a global player in software development, including app development and IT infrastructure design. It's helped over 3,000 clients in North America and Europe and has a great revenue outlook. We see here that the software application industry is expected to grow by 16% annually through 2022. And scrolling down further, the company grew revenue by 14.5% last year and 12.3% in the last quarter. Now for that cash availability metric, the short-term assets are 3 times the short-term liabilities, and the company has $79 million in balance sheet cash against just $39 million in debt, so an excellent cash position. Now this is actually extremely rare, a penny stock tech company that pays dividends but still able to manage that growth, so I'll definitely be watching this one. Next here is the US MLP arm of British Petroleum, BP, $1.2 billion BP Midstream Partners, ticker BPMP, and its 12% dividend yield. Now this one is bumping up against that upper limit for what I consider a penny stock, but it's still fairly small as far as MLPs go and gives us some nice diversification in that 5 penny stock list. Like other MLPs, BPMP owns oil and gas pipelines and storage facilities, which it then charges a fee to move those energy products, that oil and gas, through. Now, the way these companies are set up, they get a special tax break if they distribute most of their earnings to investors. So what you get is a stock with a great dividend yield. The company grew revenue by 10% in the last year and the last quarter and has a very strong cash position. BPMP has $115 million in cash on the balance sheet and a quick ratio of more than 10 times. So its cash and its receivables is more than 10 times those short-term liabilities it owes. Now that kind of financial survivability is what we want to see to make sure that the company can survive whatever happens in that broader economy. I really liked the company's most recent earnings report. Management beat by 12% on its earnings expectations and left their 2020 guidance for that midpoint of $185 million in cash available for distribution. And this is over that first half that was historically tragic for most other energy companies. Management expects distribution growth of 5% this year after a 25% increase last year, and a coverage ratio of 1.1 times means this is a solid dividend you can count on. We've still got 2 more dividend-paying penny stocks, including my favorite of the group, but I wanted to highlight a few more of the features on StockCard and show you why I'm now using the platform to research stocks. Click through that link in the description below, and the first thing you'll see is there are so many ways to find stocks on the platform. In Discover here, and then the Top Picks for You tab, you'll find lots of ideas related to your search history. You'll get ideas on companies related to the stocks you follow, as well as the ones that you've researched in the past. This Featured Themes tab is one of my favorites and shows you all the stocks in specific investing themes like electric vehicles, like COVID-19 vaccines, and work-from-home stocks. I love this type of theme investing strategy because you don't need to pick the very best stock. You just find those universal themes that are winning and then ride those all the way up. You'll also find the most popular stocks on the platform, top gainers and losers for the day, as well as the companies reporting earnings during the week. But what I'm really excited about, a feature I've been looking for on other platforms for a very long time, is if you click on stock picks in the menu here, you go to this portfolio store where you find some of these theme portfolios. These are portfolios created by stock card analysts and other experts, and if you follow a portfolio, you'll get instant notifications anytime that portfolio is updated. For example, we'll look at this next level investor portfolio of companies changing our world, stocks with a 92% gain since it was created. And in any portfolio, you can click up here and see who created it. This one was actually created by the company's founder, Hoder Mayer, and then scroll through to check out the portfolio holdings. So what I'd like to do in the future is create a few of these portfolios around the themes that we talk about here on the channel, things like penny stocks, dividend stocks, and just generally high growth stocks. Put those on Stock Card, and if you follow those on the platform, you'll get instant notifications anytime I update that portfolio. You'll see the stocks I'm adding even before these new videos come out. Next on our list here is $490 million Horizon Bancorp, ticker HBNC, and its 4.2% dividend yield. Now, Horizon is a diversified financial company providing retail and commercial banking as well as lending. And while financials have been a tough sector over the last year, HBNC has done relatively well with a 20% revenue growth last year and estimates for 14.5% growth this year. Analysts expect positive earnings this year of $1.30 per share, which should easily support that dividend. Here in the valuations card, we see that shares are trading for just 0.76 times book value, with the stock trading as high as 1.3 times book as recently as December of last year, so potentially a 71% return if it gets back up to that multiple. Again, Nation, financials have been hit hard this year, down 18%, and it's the second worst performing sector, only behind energy stocks. Interest rates near zero makes it very hard to make money as a bank, but I truly believe here, if you find the banks and the lenders with that survivability that we're looking for, you can find some of the best long-term investments you'll ever get. Now, this stock is going to continue to spin off that dividend yield and will rebound fast as the economy recovers. Next here, $564 million UMH Properties, ticker UMH, and its 5.2% dividend yield. Now, UMH is a real estate investment trust that owns manufactured home sites in the Northeast and Midwest. The company owns 123 communities with more than 23,000 home sites in 8 states and an average site rent of $452 a month. July rent came in at 95% of gross due, which was about the same percentage as last year, so it doesn't look like that COVID-19 is affecting its business. In fact, property occupancy increased to nearly 86% in the first half of the year, and the company has acquired 100 sites so far this year. Revenue at UMH grew by 13% last year and nearly 8% in the last quarter. The 3-year growth and current year both look good here. Our earnings are expected positive this year, and the company is sitting on a strong cash position, creating almost $58 million in free cash flow over the past 12 months. Now, this is probably the riskiest of the 5 penny stocks we'll look at, but that also can mean that highest potential upside. The business model, that manufactured home segment, has the most to lose in a protracted recession, but it doesn't look like it's getting hit just yet. Now, I think even on a worst case scenario, that dividend yield is safe, and the average analyst estimate of $16.50 per share means a 20% return on top of the yield. Look for the link to stockcard.io in the description below and sign up to follow and get notified for any changes in our portfolios. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.